Great, thanks so much for the introduction. As everyone finishes trickling in, you won't want to miss this session. Thanks, Chana, for having me here. I've been gotten to know Chana and Electricity Canada a bit more over the past year, and so excited to be here and learn from all of you. And I think maybe why he chose me, first of all, I'm local, so probably saved some of the cost to bring me in. We're cost competitive as a Calgary local, but also because I think about uncertainty and risk in energy supply and energy security almost every day. We've heard today, and I know over the past week, about policy, political uncertainty. We have very polarized politics when it comes to energy and climate. Policymakers seem to be going from black to white. Certainly supply chain security related to geopolitical risk that utilities have to think about. Economic security, economic risk, consumer demand. We have some black swans probably in data centers, AI, wildcards in EV demand, heat pumps demand. And then, of course, we have climate risk. And I think we often think of environment in the category of the trilemma of sustainability, but it's certainly a huge factor in the reliability, and that's what we're going to hear about today. And so I'm delighted to have two people who think about this issue very much, and they're going to be getting down into the weeds and the practicalities of what you need to know, and from two different perspectives to really explore this issue. So I'm excited. They're going to do TED Talks. We're going to do fancy TED Talk style presentations, and I'll get into some of my own questions, and then we'll be happy to get some from the audience. You can ask them about their thoughts and perspectives on this important issue. So to kick us off, I'm going to start with Kathryn. To talk about, what you're going to talk about, climate adaptation and risk.
That's great. Well, thank you so much, Heather, and hello, everyone. As Heather said, my name is Kathryn Bakos, and I'm Managing Director, Finance and Resilience at the Intact Center on Climate Adaptation. For those of you unfamiliar with the Intact Center, we are an applied research center out of the University of Waterloo that helps homeowners, communities, businesses, and governments reduce risks associated with climate change and extreme weather events. That's particularly in relation to flooding, wildfire, and extreme heat, as you can see from the photos here, and under my personal domain of engaging with financial market participants, institutional investors, financial institutions, and regulators and supervisors in incorporating those physical risks of climate change into investment and business decision making. Climate change manifests itself as extreme weather, and these events are becoming more severe. Last year alone, we saw the largest wildfire season on record, devastating flooding and extreme heat events, hurricanes, hail, and wind events. These events caused power outages, supply chain impacts, evacuations, socioeconomic implications, and loss of life. And so that's what I'm here to speak about today. How climate change is manifesting as extreme weather, what the financial costs are and how they're increasing, but more importantly, how well-informed standards and guidelines have already been developed to build a more resilient Canada, and yet they're just being deployed too slowly. So this presentation is going to showcase resources that can help owners and operators within T&D adapt to the physical risks of climate change, and in a heavily regulated industry sector, what regulators can actually be doing to drive adaptation and get risk out of the system. So with that, and since we have a short amount of time together before I'm going to hand it over to Gary, let's get right to it. So we know from authoritative bodies such as the Intergovernmental Panel on Climate Change and Environment and Climate Change Canada, the first two reports on the left, that climate change is real. It has happened, it is happening, and it will continue to happen. A certain degree of climate change is actually already baked into the system, and therefore it is in fact irreversible. We can slow down the rate of change, but we cannot reverse it, at least not with the technology that we currently have. And we understand the majority of this change is occurring because of the burning of fossil fuels. And so the global consensus is that greenhouse gas emissions must fall. And yet, according to the United Nations Environment Program, their emissions gap report of 2023, the report in the top right-hand corner, has determined that initiatives to achieve the Paris Agreement are falling short, and only a global, urgent, system-wide transformation is going to avoid climate disaster. Now, I'm sure you really wanted that depressing news at 3 o'clock in the afternoon, but if you can please bear with me, I do have good news, so please bear with me. So mitigating against greenhouse gas emissions is incredibly important, as that's going to avoid the worst impacts of climate change in the future. But that will not stop or reverse the damage that's already been done. And so adaptation, building resilience at the level of our homes, communities, and across our businesses needs to be a much more important part of the climate change discussion. And yet, according to the United Nations Environment Program, their adaptation gap report of 2023, the bottom right-hand corner, has determined that adaptation financing, planning, planning and implementation is plateauing. We are not putting enough resources towards adaptation. And yet, we know that for every dollar that we put into place for adaptation, it saves $3 to $8 in cost avoidance over a 10-year period. So Tom had mentioned this during the first session, but it's better to act now in a more cost-effective fashion rather than waiting or never adapting at all, or never putting measures in place at all. So we know that climate change is going to continue to evolve and manifest as extreme weather. Those extreme weather events are going to continue to become more severe. We are not putting enough resources towards adaptation, and therefore the costs associated with extreme weather will continue to increase. So the question is, well, what are the costs of climate change? So there is no better witness than the property and casualty, the P&C insurance sector. So this graph is the annual catastrophic insurable loss claims for Canada. So a CAT loss is any event, flood, wildfire, hailstorm, windstorm, that triggers more than $30 million in insured losses. So just to give a little bit of perspective for everyone, this graph starts at the beginning of 1983. That's when these losses began being calculated. So from 1983 to 2008, which is just outside of the gray boxed region, losses range from approximately $250 to $450 million per year. So that's what the insurance industry could expect to pay out for extreme weather events. Well, from 2009 onward, within the gray boxed region, you can see this discernible upward trend. Things really started to change. Losses now average $2.1 billion per year, with 14 out of the 15 of the last years being above $1 billion. Last year, 2023, losses reached $3.5 billion, ranking it the fourth worst last year in insured Canadian history. Now, some of you might be looking at that graph and saying, Kathryn, that doesn't say 3.5. It actually says 3.1, but the organizations that update this information just a few days ago actually came out with updated numbers for 2023, and it is 3.5. I just didn't have a chance to update this slide. This graph is corrected for inflation and per capita wealth accumulation as of 2023. So this is a comparison of apples to apples year over year. And it's also important to note that these are insurable losses. Multiply this graph by 3 to 4 times and what you get is uninsured losses. So 2023, $3.5 billion is approximately $10 to $14 billion coming out of the pockets of individuals, governments, and businesses such as utilities. And so we have to think about the socioeconomic implications that are happening because of climate change. Now, if I was to isolate for each extreme weather event, flooding, wildfire, hail, wind, I can actually do that, and I can determine that flooding is greater than 60% of all losses on this graph. Flooding is the costliest extreme weather event in Canada, the second costliest, wildfire. Thank you for bearing with me as we went through the depressing stuff. We are now done and on to the good news, as I promised. So the good news is that standards and guidelines have already been developed to build a more resilient Canada. So we know what to do to reduce those key physical climate risks. Flooding and wildfire are your costliest from a financial perspective. Extreme heat is your costliest from a loss of life perspective. So our team at the Intact Centre, we work with organizations like the Standards Council of Canada, the Canadian Standards Association, and generally speaking, for any of the reports you see here, we bring together 60 to 80 subject matter experts from across the country with relevant expertise to develop practical, meaningful, and cost-effective ways to reduce those key physical climate risks. So on this slide here, I've offered resources on ways we can reduce the risk of flooding at the level of the home, various levels of community, commercial real estate, such as the building that we're in today, and the importance of retaining and restoring natural infrastructure, wetlands and grasslands, to attenuate the effects of flooding. We've worked with Fire Smart Canada to develop wildfire protection measures at the level of the home and community, and we've investigated the impact extreme heat that it has on the economy, community health, natural systems, and infrastructure and services such as utilities. So basically, these reports are how should we be building and retrofitting our homes and communities to increase resilience to extreme weather events, and that also particularly focuses on critical infrastructure and how critical infrastructure such as utilities can build resilience within the community. So I'm going to turn to just in a second about at the industry sector level itself, what it can be doing, but I have a question for you, and it's really rhetorical, but are we just thinking about climate change, or are we just thinking about resilience in regards to the structures in which we operate and the facilities in which we manage. And if you are just thinking about resilience in that regard, you are losing the big picture of what resilience actually is. Your business operations could be fully resilient against extreme weather. And yet if the community in which you're operating is not resilient, your business operations can still be impacted by extreme weather. Let me give you a few examples. Did you know that an employee who is impacted by a flooded basement due to a high precipitation event, now this is just a flooded basement, this is not homes being washed away like what we were seeing in Nova Scotia last year. This is just a flooded basement. On average, that employee is going to take 7 days off of work to fix that flooded basement. That's an impact to your business operations. For a customer living in the wildland-urban interface and they're impacted by wildfire, and when I say impacted, that means on average catastrophic loss of home. It means on average their home is going to fully burn down. That means no utilities is going into that home, and that individual is out of their home on average 2 years. So if the community is not resilient, then your business operations will continue to be impacted. And so as businesses, how are we thinking outside of the box? How are we using already available information to provide to our employees, customers, and clients purely as a form of good governance so that we could get them thinking about resilience? How are we working in the communities in which we're operating? Do they know practical guidance is already available? How can the communities be helping utilities so that they can become more resilient? If utilities are more resilient, then the communities are more resilient. Now, for regulators, how is any of this important to you? You do not work in advocacy at all. You cannot tell any company what they should or should not be doing. And yet, through your data calls, your surveys, any form of disclosure requirements in regards to risk, you can ask the questions. This is already a very heavily regulated industry sector. By asking a few more questions that focus specifically on adaptation, you're going to put the spotlight and say that adaptation is something important and we need to be focusing on that. Simple questions can be as simple as, have you identified your risk? Are you working within the communities in which you operate? And are you providing information to customers, clients, and employees? Now let's move on to the industry sector level. And this is where the Intact Centre series of reports that focuses on factoring climate risk into business decision-making really comes into play. So throughout this series of reports, the Intact Centre developed a globally scalable tool which can be applied across industry sectors and that we've dubbed the climate risk matrices. And in this tool, the climate risk matrices, what we do is we identify the top key physical climate risks that could impact any industry or any business operating within an industry sector. And then we identify ways that you can reduce that risk reduction measures. Now, is this 100% of the identification of risk that we have in the system? Absolutely not. Most businesses, they have many risks and not just climate risk. You have cyber risk, monetary policy, geopolitical risk, regulatory risk, reputational risk, and most businesses don't have the resources, assets, and time to direct to all of these risks. So tell me, in regards to climate change or extreme weather, what are my top 1 to 2 risks that I need to know and I can put measures in place to reduce that risk? So based on subject matter advice, very similar to our other reports, we consolidated all of that information into 1 page per industry sector. We've created this tool for industry sectors such as commercial real estate, financials, and utilities. For utilities, we've created that for hydroelectricity generation, wind electricity generation, and T&D. So this is the climate risk matrix for T&D. So based on subject matter advice, we identified 6 key physical climate risks that could impact the business operations of a company operating within T&D within the geographic range of Canada. Flooding, wildfire, extreme heat, windstorms, ice and snow loading, and thawing permafrost in northern communities. When we're dealing with financial market participants, even that is too much information. And so we were asked, well, let's narrow it down. What's the greatest probability of risk in the system? Wildfire and ice and snow loading, denoted by the exclamation marks on the slide. So for our conversation today, let's just focus on wildfire. So we've identified the risks. Well, how is that going to manifest? And I'm sure most of you in the room already know, wildfire manifests throughout T&D corridors. If brush has not been cleared, then vegetation such as tree branches will fall on T&D lines. This creates arcing, fire, and power outages. We've identified the risk, how it's going to manifest, so what do we do about it? Visual inspections, either by a person or drone. Obviously, that's a little bit more expensive, but it could be a little bit more effective. And once we've identified where there's risk in the system, let's cut those trees down within 10 meters of the T&D lines. Case in point, this is where collaboration with communities comes in. There's a few of you in the room today that contributed to this climate risk matrix for T&D, so thank you for that. And throughout that feedback, it was, we know these are our risks, and we know what we actually have to do about it. But our hands are actually tied because the communities, we can't cut those trees down. So in building that collaboration with communities, what are we doing as utilities to reduce risk, which will then carry over into the communities? How are we providing information, as much information as possible, to employees, customers, and clients? So through creating collaboration, we can get risk out of the system. Now finally, the climate risk matrices also offer key questions. And those questions basically sum up to, have you identified your risks and are you mitigating against those risks? If either of those answers are no, no, I have not identified my risks, and no, I am not mitigating against my risk, that could be a red flag to an institutional investor in whether they would want to allocate assets into your company. Or that could be a red flag to a financial institution loaning money or providing insurance. Or that could actually, the financial institution could loan money at a higher rate, and the insurers could offer insurance at a higher premium. And so by purely asking the questions alone, we are now pricing risk and opportunity in the system. And if we can price risk and opportunity in the system through those financial market participants, then regulators are in a great position to purely just ask the questions in regards to adaptation. Again, highly regulated, asking a few more questions in regards to adaptation. We know climate change is going to continue to manifest. Extreme weather is going to become more severe. We're not adapting fast enough. We need to focus on adaptation. By asking questions in regards to adaptation, you will drive adaptation and get risk out of the system. Thank you so much.
Great job, Kathryn. Gary, let me say some smart things first, Gary.
Okay.
Great job, Kathryn. Anyways, just to set you up, so I think you did a great job covering what the risks are at a strategic level. Now, Gary, of course, is going to let us know what the challenges are at that tactical level. You know, if we're going to go from the macro to the micro, because you're dealing with, this isn't in the future, this is something your company's dealing with already in transmission distribution. So go ahead, Gary, wow us with how TransAlta is tackling, so AltaLink, my bad, is tackling this issue.
Wow, you. Okay. Actually, when we designed our slides, I don't know, our communications team ended up designing slides that were almost the exact opposite of Kathryn's. Few words and on a black backdrop. So anyways, just to mix things up. So Gary Hart, President and CEO of AltaLink. Just want to kind of start with the way, our world works. In the past, I'd say our world's pretty straightforward. Safe, reliable, and affordable electricity, that's the goals of the electricity industry. I think that's, the goals for every jurisdiction, every utility company. Now, when we think about even our predecessors, and this is our predecessor company, Calgary Power. I wish I could bring my dog to work like it was in this picture here. It's basically been the same thing for us for 100 years. But as we kind of look forward, we have different assets from maybe what was back then in the days of Calgary Power in its early years, but the same three goals exist. And I'm going to skip through this. I think everybody knows who AltaLink is, so I'll just get to the good stuff. I think the big challenge for us now with climate change, and I think Kathryn's done a great job in setting this up, is it's getting way harder for the utility industry. And we need to actually change. And it's very concerning. This is what keeps me up at night. And we need a new response from our industry. And I think Kathryn's right. She's identified it there. The institutional investors, if utilities, if companies aren't doing anything about climate change, kind of shame on them. So there's a lot of change that's in front of us. So I won't go on in a lot of detail in Alberta, but Alberta had its worst wildfire season last year. I think people know that in Alberta, we're in a drought situation. We're very nervous. Thank goodness for the rains that we've had. May is typically a very dangerous month for wildfires. September is the next most dangerous month. And we've had some very significant fires. Last year, the most ever. I think last year we actually had the same amount of hectares burned as Canada would burn in a whole year, typically. So Alberta contributed a huge amount to last year. Last year across Canada even was 8 times more than the 25-year average. So wildfires is on the increase. Maybe just anecdote. I live in Canmore. I'm tired of looking through smoke. I don't know how many days a year that we actually can look at a blue sky. It feels like every summer, spring, summer, and fall, once you get in that May to September time frame, we're looking through haze. Sometimes I can't even see the mountains, which is kind of crazy. Last year, no catastrophic wildfires in Alberta. Very close for the town of Edson. Town over 8,000 people had to be evacuated. The fire, I think it was called the Pembina Complex Fire, got within 1.5 kilometers of the town. But luckily the weather changed. We got rains, the wind changed direction, and the fire stopped, which was fantastic. Last year as well, for the electric utility industry, we started no significant wildfires. None of the large wildfires that burned last year came from our industry. Our industry typically starts in Alberta, and it probably ranges between 5 to 10% across North America, but in Alberta, we're just shy of 10% of the wildfires are started from the electricity industry. Now, down south, there's some very famous fires that have been started by the electricity industry. The top is in Paradise, California. That's a camp wildfire. I think it was 85 people lost their life in that fire, which is a real tragedy. Down below is the Lahaina wildfire that happened in Maui. Over 100 people lost their life. Obviously a tragedy for those communities and a tragedy for the electricity industry as well. So what are we doing about it? So climate change is it's tough, and we have long tenured infrastructure. To change our infrastructure, you just don't change out our infrastructure in a heartbeat. There's a lot of work that's going on in our industry. I'm not speaking on behalf of the whole industry, but these are some of the things AltaLink's involved in. We're involved with EPRI, as I think most major utilities are right now. And what EPRI's trying to do is actually address what climate change could do moving forward. I'll kind of whip through this fairly quick. The one thing they're trying to do is come up with a consistent approach to how we look at climate change and what the response needs to be. So we want it to be consistent, collaborative, and then I think their other big tagline is comprehensive. So what are they trying to do? And again, it's a long story, but the punchline of it is, let's start with the climate data. Where is the climate really going to go? I think Kathryn talked about it's irreversible. So what does that really mean? And then how do we actually, as an industry, get comfortable, again, with long life assets in potentially making some changes? How do we get comfortable that we have the right types of forecasts? So, I think the idea is to work together on that, so we're not bringing to regulators, to policymakers, each utility's perspective, and they're all different. So as much as we can, we like to kind of standardize that. Then we'll look at vulnerability assessments and what is our resiliency adaptation plans. So this is a piece of work that's been underway for about a year. It's a 3-year duration. So in the next 18 months or so, we should see the outcome of this. I'm very hopeful that this will be a really important piece of work that the utility industry can leverage. Next is around wildfires. And wildfires, we've certainly done a lot inside of our company. AltaLink's owned by Berkshire Hathaway Energy. Lots of utilities down in the States. They actually have a utility that is in California as well, so they've been really brought into the fold as it relates to wildfire risk. 3 big focus areas for us. Number one is to protect customers and the communities. We do not want to be a part of, the tragedies that I showed on some of those other slides. We want to do everything we can to mitigate that risk as much as we can. And that's really around mitigating the risks of ignitions coming from our assets. So that's number one. Number two is increasing our resiliency. And so our assets, and last year in Alberta with all these wildfires, we had our single largest restoration activity that we've ever had as far as putting our lines back in service. And that Pembina Complex fire was the one that really hit us hard. ATCO and Fortis, I'd call it the other two rural utilities, we'll push aside ENMAX and EPCOR that serve the cities. They were also significantly impacted by the fires that happened last year. And then I guess last but not least is that we're trying to manage the fact that these catastrophic wildfires are uninsurable, which is, again, what Kathryn was talking about. I'll talk from our parent company's perspective. In California, you cannot get insurance basically at all for wildfires. If you want $1 of insurance, the annual premium is 80 cents. It makes no sense. In Alberta, we can still get wildfire insurance, but it by no means is the amount that we would need to actually deal with a catastrophic wildfire. So essentially now we're uninsurable for the large catastrophic wildfires. As we deal with the fact that this is an uninsured risk, every time we sit down with the insurance companies, the majority of the conversation is around our wildfire mitigation plans. That's what they want to hear. And they get under the covers of our plan in a very significant way. 10 years ago, they wouldn't even ask us a question about it. So that's insurance companies. That's what we're dealing with there. The next is our credit agencies. There was just a report that came out in November from S&P. I think it's called, the heck is the name of that thing? I don't know. The name will come to me. If you get a chance, that is a very interesting report that the credit agencies did around wildfire risk and what it's doing to our industry. And they took the opportunity to actually downgrade a bunch of utilities around that time. And as you know, when the credit agencies downgrade utilities, our cost of borrowing goes up. When we sit down with credit agencies and try to defend our credit rating, again, the entire conversation is around wildfire mitigation plans. What are you doing? I think the title of that thing was something like there's a storm looming or something like that is in the title of it. Storm looming for the utility industry or something like that. All right, last but not least is the actual debt holders themselves. A month and a half ago, I met with our U.S. companies that are actually interested in investing in us, public debt offerings. Exact same thing. The whole conversation is around our wildfire mitigation plans. They want to know whether we're in a position to actually manage the risk around wildfires. So a big change. Now, I'm come back to that safe, reliable, affordable operation. So I'm just pulling out the safe and affordable piece here and why it's getting more complicated for us. On the right-hand side, we're doing everything we can. Things like the EPRI piece of work, things like our wildfire mitigation plans, us addressing everything we can do to kind of mitigate the risks around these fires, protect our customers and the communities. There is a real concern, though, on the affordability side. How do we manage all of this? And it's going to be expensive. It's not going to be cheap. We started our wildfire mitigation plan back in 2019. Relatively speaking, we're going after the low-hanging fruit, things that we can do to actually mitigate the risks of us starting wildfires. But, in all honesty, I am a bit concerned. Where does this all go as far as cost structures? I was just in California with some of my team, meeting again with, some of the California utilities, and I would say They've been to the party on this. They're 5 years ahead of us. I shouldn't say they're 5. They're 5 more years experienced. We're just stealing all their stuff and incorporating it into our wildfire mitigation plan. So they've got 5 additional years of experience. Very promising, some things around the response side. So they've done a lot of work in putting cameras throughout their service territory. Maybe satellites at some point in time, come to play. But I do think there's a real opportunity on the response side. Anytime a fire starts, can we get a lot quicker at actually putting that thing out before it actually becomes a challenge? And my hope would be the way that we can deal with affordability is we can find a way to kind of, let's go after that low-hanging fruit as far as mitigating the ignitions. But I think we're going to really need to be there on the response side because I don't think we can eliminate all the risk. And then in addition to that, we only start 10% of the wildfires. And I don't want to be looking through a haze for the rest of the days that I live in Alberta, at smoke and maybe not even being able to see the mountains as we move forward. So tackling the issue on climate change, and I managed to come in for the question, I think, from one of the regulators around partnerships and so on. But I do think this is an issue that utilities, regulators, and governments, and I like Jana's response. We need to educate ourselves on this. What can we do? And this space, I think we're moving rapidly, trying to come up with all the great ways. We'll keep filling out Kathryn's sheet there on mitigation strategies to deal with climate change. But I think we all need to be educated on how to handle this risk as we move forward. So governments, regulators, utilities, I think there's lots of work to do. I'll maybe just put a plug in here for Electricity Canada. I know this is Electricity Canada CAMPUT. I do think through those industry association groups, there's a real opportunity. And I know Francis and Michael, they've done a lot of work already in supporting wildfire. I think there's more we can do there. And I do think there's more, and let's call it on the education side. I would hope through CAMPUT that we can talk about all the things that, all the pros and cons, what are all the opportunities to deal with and mitigate this risk as we move forward. All right, with that, thank you.
Gary, you did wow us. I'm wowed. I love to hear, the nuts and bolts of what industry has to do and the challenges. Now, the question I'd want to ask you is, where's Warren Buffett going to invest in Canada? But I won't. I'll move on. Again, you have this opportunity in front of this room. You've laid out that for some utilities, this is an existential threat. A catastrophic wildfire, some kind of weather event could be an existential threat to their business. I want to hear from both of you how you think regulators should be reconciling the cost. And Monica mentioned, the number one concern for consumers is affordability. This sounds very expensive to me. How do you suggest to them, or what do you think they need to know to reconcile the cost of wildfire mitigation against this general issue of affordability? Who wants to start?
You go first.
Well, and I think I kind of did a little bit of it in the presentation there. Again, it's educate. We're trying to do that. And again, I just spent. I've been down to California twice in the last 2 months, and there are some very generous utilities that are prepared to share ideas around how to do things. As they look at how they're dealing with wildfire risk, they're actually doing things. Interesting enough, they've changed some direction. They thought hardening, 100% hardening, 100% vegetation management was the best way to deal with the risk. They're kind of backing off that. They still think it's an important ingredient, but they think there's some things they can do on the operational side that can help. And so, I take a lot of credence on that. And then on the response side as well, like helping the response. So I think we have to be creative. Ultimately, if you really want to get rid of the risk, you bury every line, transmission and distribution, and there's just no way we can afford that as an industry. So I think the way we need to deal with it as a utility and how we help regulators is let's keep trying to push this and try to find the ways to actually drop drop the risk without spending crazy money.
Super. Kathryn, that same question for you, but maybe also if you can just touch on how other industries are reacting to it. Gary talked a lot about how utilities and electricity, distribution and transmission are sharing ideas. Maybe you can also add the perspective how different industries are addressing it.
Of course, and really to Gary's point, we have to remember wildfire is a naturally occurring event. And so wildfires are actually a good thing for our environment. It helps with soil, and there's a lot of great benefits from wildfire. Why wildfire, as Gary was saying, from smoke inhalation to obviously the destruction to communities. So one, there are a lot of the resources that I had mentioned, there are practical, meaningful, and cost-effective, like there are things that we can do to provide to communities that we can reduce risk at the community level. So utilities don't even have to take that responsibility. They can just provide things to individuals and communities that communities can uptake, that individuals at their home level. Gary's home in Canmore, I lived in Canmore and Edmonton as well. And obviously wildfire is a big issue in Edmonton. But what am I doing around my property to reduce that risk? So there are cost-effective things that we can be looking at and deploying. Again, it's just thinking outside the box and where our responsibility lies as an industry sector. And Heather, to your point, there are some really great industry sectors. I'd actually say the commercial real estate industry sector is in a really good position where they've done a lot of great work. Globally, 25% of all emissions come from commercial real estate, so they're doing a lot in regards to transition, but they're really starting to pick up the pace in regards to adaptation. So you have associations across Canada, REAL, PAC, and BOMA. They're really focusing, the Canadian Green Building Council as well, they're really focusing on, well, what can I actually do to build resilience? How can I tie that in? And instead of having it siloed, your transition plans and your adaptation, how do you link those two together? And the statistic that I said for every dollar of adaptation is $3 to $8 in cost savings. People always say to me, that's not a return on investment, and I would agree with them. But it is an opportunity cost that's no longer being lost. And so that dollar of adaptation should be your foundation. You can utilize those other resources then for other initiatives.
Perfect. Great answers. I'll ask one more question and then I'll be opening up to the audience. But we focused on wildfires. That's obviously very important and affects us every summer. We're pretty grateful. I know some of you from out of town may not like it, but here in Calgary, we're grateful for the rain. But what about other extreme weather? Do you have to deal with them in a different way? Is the adaptation roughly similar? So what are you seeing in changes in extreme weather? And do you think there's some synergy, I'll have to use that word, in the adaptation to it?
Do you want to start on that one?
Sure, yeah. So as I had mentioned on that catastrophic loss claims graph, flooding is the greatest risk. If you're going to look at risk across Canada, it's flooding. You can look at residential homes. Gary was talking about the insurability or uninsurability of utilities, where you're seeing that in the residential housing market. You can have home insurance without flood insurance, but you can't get a mortgage without wildfire. So there are different risks in the system, and you have to understand how the risks interact with one another. So flooding, and again, I'm just going to speak at the home level, it usually doesn't, there's not catastrophic loss when you're dealing with flooding. When you deal with wildfire, it's a completely different loss. Whether you're at the residential home, the community level, or utilities, you're usually talking about complete destruction. So Heather, to your point about are the adaptation measures different, the idea is the same, but the impact of the extreme weather event is different, how it interacts with the ecosystem itself. You can have the heat dome in British Columbia and Alberta in 2021. That dried out soils, that made wildfires. It created basically kindling. It made the wildfires even larger. That then killed the soil. When soil is burnt from a wildfire and then major precipitation events come in, it actually doesn't absorb anymore. It actually actively repels. So then you have major flood events and wildfires. So they're all linked with one another. The adaptations, we have to think about it as a system, basically.
So I'll maybe just chime in. Obviously in Alberta, our number one concern is wildfires, but it wasn't that long ago we had a very significant flood event. I think it was on your graph there that you showed, which was excellent. I was down at Berkshire Hathaway's AGM just the last weekend, and they had a very significant tornado event that went through there, and I think they're seeing an increasing trend around that as well. So, these extreme wind tornado type events, I think every jurisdiction is different. For the peers that I sit with on Electricity Canada that are on the coast, the hurricane seasons are causing them lots of consternation as well. So, I think it depends where you are and around what the risks are that you're most worried about. Alberta, it's wildfire.
Yeah. If I can just add one other point, it kind of ties into your question before. Gary, you had mentioned this, like just how the industry itself, you kind of need to get your ducks in a row. The Calgary flood in 2013, basically what happened within the insurance industry, they didn't insure overland flooding. There's high precipitation events, and that was not insured. But they felt that the regulators were going to come in and they were going to regulate it. So the industry actually came together and they started offering product to their customers based on recognizing they're going to get regulated. And so to reduce that sense of regulation, and I know the utilities, some is publicly owned, some is privately owned, but again, how do you all get your ducks in a row so you know kind of how you're approaching in the situation more thoroughly?
Fantastic. Any questions from the audience? Great.
Yeah, sure. Hi, Justin from Natural Resources Canada. So I just wanted to ask you, I'm not going to pretend there's any silver bullets. I think that came out clear in both your talks. But what about win-wins or potential win-wins? So hopefully this isn't one that they pulled back on that you're talking about, Gary, but I heard in California they're exploring microgrids in remote regions. So in that case, when there's a forced public safety outage, you kind of turn off the overhead wires and you're on a microgrid, and at least essential services can still run. Are there any things like that maybe you can point to that, in that case, it helps with the adaptation, but it's also kind of the direction we're heading anyways? So is there any win-wins that you'd like to point to? Thanks.
Yeah, so our sister company down at Pacificor, there is a little community. Justin told me he was going to throw some zingers here at me just to.
Sounds like you guys are partnering. I don't know if
He used to work
I
at
like this.
Electricity Canada, so. Anyways, there is a region that actually fits exactly that bill that Justin was talking about, where it's a very remote region. Pacificor actually did have to shut the power off for an extended period of time. They did bring in generators and essentially set up a little microgrid. So sometimes, Justin, that might be a permanent thing. Sometimes it might be, a temporary type of installment. I guess I heard some of the conversations that came up to, the last panel as well around, affordability and where all this goes and grid supply versus bypass. I guess the one thing I would say is electricity, I think most people believe we're going to go through a big growth wave. And I do think incumbent upon us as an industry to have a hard look at that growth. And I think we need to be very open. I think it was maybe Mark that had the comment or question there. I think we need to be really open to how we actually handle that growth moving forward. And maybe it is a little bit of an all of the above to try to find the right way to serve that growth so that we set ourselves up for the future a little better. And I would hope that would be possible, actually. And I think microgrids, they will have a bit of a role here. I'm personally nervous, and I know this is maybe down the road from the wildfire panel, but there's a lot of, I'll call them more temporary loads that want to come onto the utility industries and connect up. And we see a lot more of that in the US than we have so far in Canada, but certainly it's in Canada as well with crypto miners and data centers and so on. And anyways, all that growth, I think there's an opportunity for us to kind of get this right, and it's going to take a little bit of planning and foresight to kind of do that.
Great. Kathryn?
No, that's
Okay, great answer. I love all this learning that you're getting from the South, and I'm sure they're getting good learning from us on some other issues, like how to deal with extreme cold, probably. Any other questions from the audience? And this will probably be our last question, so you
Okay.
could throw in your closing thoughts there too, you guys.
Okay, I'll keep it simple. Austin Uppal, I'm with Burns & McDonnell. I was actually just in California a couple of weeks ago as well, and a lot of the conversation there around wildfire was really utilities, given the tight, the legal liability concerns that the utilities are facing. They're taking an outage. They're creating models to predict where wildfire can happen. And then they're actually taking outages, which is completely contrary to their liability, as well as, the conversation around sustainability that we're wanting to have. And I'm wondering, the role of, you talk about undergrounding, strategically undergrounding some sections. Like, where do you see that pulling, avoidance versus, I guess, innovation and strategies to mitigate? Where do you see that conversation going?
Okay. Do you want me to go?
Sure, you started.
Yeah, I'll start that one. I hope I'm answering your question right here, but one of the big tactics that's been used in California, and we intend to employ the same tactic in Alberta, is what they call public safety power shutoff. So we're going to do everything we can not to go there. And again, we're trained to be safe, reliable, and affordable. And reliable is in spades there. But there are times where it is bone dry, the conditions are extremely hazardous, and then coupled with it, you get extreme winds. And when you get into those scenarios, it is ripe for a catastrophic wildfire. And that's when utilities and again along the western side of the U.S. have employed this public safety power shutoff. So I think it's an important tool. During that time, it is just way too risky to supply. I'll maybe also take an opportunity to just raise one other, or maybe do you want to expand on that?
All I was going to say, just in regards to underground, and you had mentioned kind of affordability in that regard, I just want to acknowledge that 60% of Canada lives within the wildland-urban interface. So that is a lot of ground to cover in regards to T&D lines to bury underground. That's from an affordability perspective.
Yeah.
Yeah, now let's get to your concluding, your mega thought here.
Yeah. So I think I'm kind of happy with where the conversation went. Kudos to Kathryn. I thought she did a great job of teeing this up. I'd say the one issue that we're still wrestling with, and it's kind of the public power versus, if you will, privately held utilities. And I know Warren Buffett, again, who owns us, he was musing about this over his weekend AGM, is when this issue hits public utilities, there's a catastrophic event. Ultimately it falls to the taxpayer and the customer to actually, pick up for the liabilities that have been incurred by the utility industry. For independent power, I think in the U.S. they use this IOU, independently owned utilities. The liability falls onto the shareholder and the debt holder, and so, I guess he's musing, and I think he even said in his AGM is, he goes, I think I might have made a mistake in thinking that IOUs are the right thing to be involved in. So and PG&E, as I talked about, they're bankrupt. They went bankrupt. They've been in and out of bankruptcy. This threat is a real threat to independently owned utilities as we move forward. So we do need to find a way to kind of deal with this. It's a real problematic kind of area, but it's an area I think we're going to need to figure out what the best thing is. And I think Warren kind of summed it up. He kind of said, listen, independently owned utilities, he thinks they have a role, thinks they can do a great job, but if this risk is too great, maybe, public power is the best way for the industry to kind of move towards. Okay, it might be the best way to manage the risk.
Very sobering, but
Yeah,
obviously a conversation that needs to take place more and louder. Kathryn, last thoughts to you.
Just in regards to scenario analysis that was just mentioned and forecasting out where potential risk could be in the system, we have to acknowledge that there is going to be continued increasing risk in the system. When I mentioned $3.5 billion, in a few years we're going to look back at $10 billion and say, oh, 3.5 was nothing. And so we really have to start, to Gary's point throughout his presentation when he said, you know, what's our low-hanging fruit? As we're doing scenario analysis out in regards to risk, we also need to do cost analysis. What is the low-hanging fruit from a medium perspective, where are costs at there, and from the high end. But recognizing that adapting now, that's going to save you money in the long term, and it's more cost effective to adapt now rather than waiting. So really, as effectively as possible, where can we do cost analysis and really start putting those measures in place as soon as possible.
Fantastic. So wildfires was not the niche panel you thought it was going to be. This is existential considerations for us. Thank you guys for sharing your knowledge and giving us so much food for thought here. Please join me in thanking my panelists.